Okay.
Okay. Oh, I didn't hear the little recording music, so. I just want to thank everybody for allowing us to reschedule the deployment committee meeting because we really needed a full board meeting to deal with some of the issues we're dealing today. The numbers exceed what the deployment committee is able to bless, and it's some stuff that we really need to talk about, given the fact that there's so much going on. So I'll call this meeting to order, and I'll begin by asking for public comments. Any public comments? Okay, hearing none. Then the first item on the agenda is it updates and recommendations involving our investment programs. And I think usually that begins with Bert.
Bert? That's right. Thank you, Madam Chair. And good afternoon, directors of the Green Board. Green Bank. It's been a long day. It's been a long day.
We're a green board. We're green.
This is like my third board meeting of the day. I am boarded out. Anyway, so we have before us today a loan that we were approved for by the USDA. Goes back to 2020 when we first applied for this loan under the Rural Utility Service. It's under their Rural Energy Savings Program. So we were eventually awarded with a $10 million loan commitment, and we're now in the process of actually working through the final documentation, which is all set. However, there was a condition that we needed to meet in order to sign off on that package, which we weren't able to get to in time before the curtain came down on just about every federal grant or loan program. So anyway, once that curtain goes up, which we hope it will, since this is a very broad-based program, this RESP program, we want to be ready to finalize that loan. And one of the security arrangements that is required under the $10 million RESP loan is that 50% of the loan outstanding from USDA, which at the present time is zero, but over time it will grow as we use the funds for the programs described in the loan application. 50% of the outstanding needs to be covered by either cash collateral, which is very inefficient, as you can imagine, or a letter of credit from a financial institution. So we're going the letter of credit route, and our main operational bank, Webster Bank, is in the process of underwriting us for a flexible letter of credit. So as we make drawdowns, the amount outstanding or to be issued under the letter of credit will increase. So, for instance, if we draw $2 million from the USDA under the program, we would have to match that with a $1 million letter of credit from Webster Bank. So we're in the process of being underwritten, but that's going to take a few weeks because all of the loans that we've obtained from Webster Bank up to this point in time have been backed by specific collateral. And this would be toward the general assets, so to speak, and general credit worthiness of the Green Bank. So it requires a different underwriting process. They don't foresee any issues, but it's just a process that they have to go through. So in order for us to more quickly get to a letter of credit that we can hopefully close out, we want to arrange with Webster a $500,000 letter of credit, which would be cash collateralized, which is typical if you don't go through the underwriting process. So the bank basically freezes the amount of money that is required to offset their exposure under the letter of credit, dollar for dollar. So in this case, $500,000. So that's what the memo explains. In fact, the memo was a lot shorter than this explanation I gave you today. But that's the full context. So we would proceed with the board's approval. We would proceed to get that letter of credit ready and able to issue to just close the transaction. And then subsequently, as we make larger drawdowns, that will cover a drawdown up to $1 million under the RESP loan facility. And what we would do is we would get in place and substitute for that cash collateralized letter of credit a non-cash collateralized letter of credit, which would be just based on the underwriting that Webster Bank does for the Green Bank. So that's the explanation of the request, and it's pretty straightforward. In terms of when we expect to sign the documentation, I believe the hold generally is a 75-day hold. So, and I believe that was issued, it was after President Trump took office. So I think it was about a week after that.
When he issued the OMB memo.
Yeah, I think it was like the 27th or 28th of January. So we're a little ways into that 75 days, and hopefully by the end of the 75 days, we'll be able to move forward with executing all the documentation. Happy to take any questions from the members of the board.
Any questions?
And there are the resolutions.
Yeah, okay. So
Lonnie, if you'd like a motion, I'll move adoption of the resolution number 1.
thank you. Is that Matt? Who's that?
Yes.
Thank you. Do I hear a second?
Second, John Harity.
Thank you. All in favor?
Aye.
Aye.
Thank you. Thank you. Opposed? Abstaining? Okay, thank you. Moving on.
All right. Again, thank you to the board for allowing this special meeting, given the size of the transactions that our team is going to be presenting exceed the approval authority of the deployment committee. So we had to reset this as a board meeting. We're going to go into those transactions in a second that focus in on the Greenhouse Gas Reduction Fund, the National Clean Investment Fund, and specifically our work plan implementation. So we're going to be providing a couple of examples, or excuse me, a couple of recommendations for approval to move forward with various transactions. But before we do that, I wanted to just provide some federal context that we're currently in. It's hard to believe that we're less than a month into the presidency of President Trump, and a lot has happened. Obviously, coming out of the gate, in fact, at the inauguration on the 20th of January, you might recall the pomp and circumstance of the signing of all the executive orders that went on during the inauguration, including a number of executive orders that are in or indirectly involve some of the programs that Connecticut is interested in, some of the initiatives that we really work hard to focus more investment in. So just as an example, we've all heard in the press the DEI programs. That most likely includes a lot of the Justice 40 programs that were implemented in the Biden administration, which, through the bipartisan infrastructure law and the Infrastructure Investment and Jobs Act, a lot of them had a Justice 40 requirements built into them. So I suspect all of those are implemented by this executive order. We're all familiar with the efforts that New England states, Northeast states, Mid-Atlantic states have been taking to develop offshore wind. in the region. Of course, there's an executive order now that slows down the leasing of offshore wind sites. And then, of course, as it applies to climate change, we saw the executive order that relates to stopping our participation in the Paris Agreement. Obviously, there's more here, but right out of the gate on Inauguration Day, a number of executive orders were issued. And I just want to give some context, that being the first day of President Trump. And, when you all come to our offices here and walk into our office at 75 Charter Oak Avenue, the first thing you see on the wall is Executive Order number 1, signed by Governor Lamont. That is, in fact, the greener.gov effort of his administration to lead by example. So very different, things, very different leadership at different levels. But, executive orders are a means to express the policy objectives of the administration. Then, as Bert was alluding to, we saw the Office of Management and Budget memo that was released, freezing all federal funding. You all, I'm sure, recall that in the press, funding all across the board, everyone from social services to environment to farming, you name it, everything was frozen. Attorney generals across the country raised issue with that. A lot of people raised issue with that, and the memo the following day was rescinded. But the message was sent right from the president to his agencies on what his policy objectives were. Just last week, as it kind of things come closer to home, EPA Administrator Zeldin tweeted out a message involving the Greenhouse Gas Reduction Fund and the two components, one of which we are in, the National Clean Investment Fund, $20 billion. We all know that this was among the single largest investments in the Inflation Reduction Act, supporting green banks across the country. So he had tweeted out that they found the money, and the money was parked at financial institutions, which you all know we have a part of in our relationship with Citibank through our account control agreement. We received funding through that account, which I'll talk about here in a second, but it is in support of our work plan that we are a part of with the Coalition for Green Capital. And then coming all the way up to, within days, literally yesterday, Department of Justice official resigned after being ordered to take actions that were unsupported by evidence to freeze these accounts for the $20 billion under the Greenhouse Gas Reduction Fund. So, we are literally less than a month in, and these are the things that our team is having to deal with, navigate through within the context of, advancing our objectives and work plan here in Connecticut. There was a lot of activity in terms of our involvement in various greenhouse gas reduction fund processes. When the IRA passed in August of 2022, immediately the EPA went into public process mode. Our team, a number of us, were involved all the way through October 12th of 2023. It felt like we were all waiting for that date to come and end because we were all working overtime in these public processes to provide public comment, feedback, and guidance to the EPA, and then pull together our various applications underneath the 3 program initiatives. So October 12th couldn't come soon enough in 2023. But we did win indirectly through several proposals. One is DEEP's Project Sunbridge proposal for Solar for All at $62.5 million. That funding, following the memo, the OMB memo, was put on hold. So there have been no funding accessed through Solar for All since the issuance of that OMB memo. The National Clean Investment Fund has differed. This is our, Coalition for Green Capital competing for and winning $5 billion of the nearly $14 billion underneath the NCIF, of which $93.5 million goes to Connecticut, us as a sub-awardee. we were able to execute our sub-award agreement, and then obviously pull together and receive through an account control agreement with Citibank the transference of that $93.5 million in our name for us supporting our program here in Connecticut, the $40 million across our work plan that includes 6 areas, but also including New Hampshire and Puerto Rico, which we're currently working on loan security and technical assistance agreements towards. So today, we're not going to focus on New Hampshire and Puerto Rico. We're going to focus on ourselves and all the great work that the Green Bank team has been working on to pull projects together. We're going to start off with Bert and team talking about green homes, which is really working with our local community banks and credit unions through the Smart E-Loan and our linked deposits, taking our linked deposits pilot into full force. Obviously, from a public policy perspective and eligible projects that we're focusing on for green homes, this would support Connecticut's public policies, including Public Act 19-35, which Chair Reed might recall. That is an act concerning the green economy and environmental protection, which created the Residential Renewable Energy Solutions Program, the successor to the RSIP, the Residential Solar Investment Program. Also, the local lending will benefit Public Act 21-53, an act concerning energy storage, which set a 1,000 megawatt battery storage target by 2030 for Connecticut, and is being implemented through a docket at PURA and co-administered by the Green Bank and the utilities. So you all hear from Sergio from time to time. This is a possibility here of adding battery storage to those projects. And then we're going to dig into green school buses, of course, through Public Act 22-25, an act concerning Connecticut's Clean Air Act. There were provisions within that act that set targets for zero emission school buses, 100% in environmental justice communities by 2030, and all communities by 2040. So we have very, very ambitious public policies that our legislature has passed that we are looking to support, advance, and catalyze through our efforts through these resources. So I just wanted to provide some of that background and context as the team now goes in and presents several of the proposals to you. So let me turn it to Bert, and we're going to jump into the green homes aspect of our work plan.
There we go. Thanks, Brian. Yeah, so as Brian explained, we have 6 priority areas under our implementation plan for the NCIF funds that have been awarded to us under the Greenhouse Gas Reduction Fund of EPA. And one of those priority areas is green homes. So where we would be using funds to deploy either clean generation or energy efficiency into those either single family or multifamily homes. And this is separate and apart from any activities that we would do with Solar for All money. So this is just the NCIF funds. So what we would like to do is to build off of the success that we achieved with the linked deposits program that we initiated with Mutual Security Credit Union. That's a program that was approved back in mid-2023 by the deployment committee for a 1-year period, and that was extended until June of this year, the end of our current fiscal year. And the idea there was to provide some relief to Mutual Security, which required, prior to this linked deposit, that they were sourcing deposits in the market that were pretty much equal to, if not in some cases, higher than the loan rates that they were earning on some of their Smart E-loans. So this was a means of trying to provide some relief there by us providing those deposits at a preferential interest rate that we negotiated with Mutual Security. In a similar way, we would be doing that with a number of additional Smart E-lenders under this special linked deposits program, with the deposit funds coming from some of the NCIF dollars that we're getting under the award that has been granted to us. So we had explained under our implementation plan the concept of financial instruments. We did not specifically call out a concept of linked deposits, so we want to just make absolutely clear to the board in full transparency that linked deposits are to be considered under financial instruments, and that the board understands and blesses basically a portion of the funds that we have from EPA to use in this manner. So do you want to go to the next slide, Brian, please? So the specific proposal is to use up to $10 million in NCIF funds. We have available to us $40.8 million under NCIF, but a portion of that is technical assistance and administration, $4 or $5 million. So if we just use the high side number, 5 million from the 41, that's a little over 36 million that we have available. So up to 10 million would be used in this program. And we would deploy these funds either to existing Smart E-lenders, or maybe we're in the process of bringing on some additional lenders. You recall just recently the board approved SunGage as a new Smart E-lender under a innovative program that we're bringing forward with them, and hope to have that launched by the spring. So we're in the process of setting up those meetings. In fact, meetings have been set with all the Smart E-lenders to discuss this concept, and we would negotiate broadly equal terms with all of those Smart E-lenders to say, here are the funds, here are the interest rates that we will expect on these deposits, and which would be at a preferential rate. The rate that they're earning, that they're paying on deposits in the market now are somewhere in the vicinity of 4%. If they have to raise funds by issuing certificates of deposits, for instance. So these would be at a lower rate. In fact, that's the interest rate. About 4% is what we're earning on the Treasurer's Stiff account, which is where we have our money on deposit in a AAA rated fund that's run by the Connecticut Treasurer's Office. So this would enable dollars to go to homeowners at lower interest rates than under existing Smart E rates. And we would target those lower rates to low income and disadvantaged communities, because under our implementation plan, at least 40% and preferably 50% overall of our deployment funds should be going into these LIDAC communities. So that's really going to be the key focus that we'll talk through with the Smart E-lenders, and using these deposits to encourage that investment. This program is we're asking for a little bit more than 5 years, 5 years from this June 30th. So to sunset June 30th of 2030, and that's pretty much the idea here. It is straightforward, but I'm happy to take any questions from the members of the board on this program.
This is Lonnie. I just want to say, I think, it's important to stress that our overall philosophy here is to be ready for anything, but to keep moving forward and to hope that we get the go for it sign along the way, but that, the battles are being fought, but that we don't want to be frozen. We want to be ready to respond, ASAP.
And to that point, Lonnie, forgive me, I forgot to mention that I did note that an account at Citi has been established in the Connecticut Green Bank's name at $93.5 million. We did access $360,000 for technical assistance, which essentially was recovering our administrative costs from the original award date of CGC with the EPA in the fall of 2024. So we got that through the end of calendar year 2024. We have since put in a request for administrative costs for time served in January that has not been transferred over to us. So we believe the accounts are closed given what is happening in the backdrop with the EPA. So just some additional context.
Technically not closed, but frozen.
Frozen.
Yeah, frozen.
Yeah.
Any
so-
more questions? Any more questions?
Yeah, so I was just going to add that that we should think of these funds as being deployed just in the usual manner that existing funds that are actually sourced by the Smarty lenders themselves and are deployed into the market. The board probably being aware of the fact that the Green Bank doesn't currently lend any of its money into Smart E. These funds are really loaned by the Smart E lenders that source deposits, from their customers, and they use those funds to put into the market. What we provide is a loan loss reserve, but with a particular feature with mutual security that we provided some linked deposits. So those deposits are going into mutual security, and the mutual security is blending those deposits with other funds that they have and lending on into their Smarty customers. So this would work the same way as that for clean energy deployment purposes, not resilience, right?
No.
Yeah.
Yeah.
That, just to make that clear.
Perfect. Yeah. Thank you.
Not for resilience, but for clean energy purposes. If there aren't any questions, I guess we can move to a vote. Oh, I'm sorry. There's a
I was
question.
gonna say, so the upshot is that we'll plan to access and use these funds as and when they become available.
Yeah.
Sort of for the continuity of the program. And that's all we can control. Is that the gist of it?
That's right. That's right. The idea is if you'll see by all the programs we're putting forward today that we've got about $50 million circled in potential project volume, if you will. Obviously, that exceeds our 36 million that we mentioned earlier in the presentation that's available. But the idea is to have enough of these programs available and ready to go so that we can pull the levers of whichever program is moving the fastest and the quickest.
Yeah, I would support that. I mean, in the sort of uncertainty that Brian outlined, I mean, we've seen in the past with other uncertainties, from different items that it can be really damaging to these programs if they're sort of stop and start or unreliable. So anything we can do to keep the pump primed, I think, is really important here. And hopefully communication with our stakeholder partners that we're making those efforts, just so, we don't have to restart, or have the programs lose sort of reliability in the eyes of the stakeholders.
Exactly.
Does anybody want to motion to approve? We're on resolution 2, right? So is anybody, maybe Matt?
Yeah. I'll move adoption of resolution 2.
Okay, do I hear a second?
I'll second. Adrian speaking.
Adrian, thank you. Thank
You're
you.
welcome.
All in favor?
Aye.
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 Opposed?
Aye.
Aye. Go. Okay. Opposed? Abstaining? Okay, thank you. Moving on. So this is very exciting, the the green school buses project. And I know that we have, let's see, so Sarah Harari has been working on this, Kevin Moss, Larry Campana, Bert, of course, and Stephanie. So Sarah, did you want to start? Who wants to start?
I'll start. Thank you, Chair Reed. So similarly, Brian, if you could advance to the next slide. Similar to what Bert covered, green school buses was one of our 6 priority funding areas in our EPA-approved work plan. And with the context that we just talked through about proceeding at pace according to our EPA schedule, our CGC work plan schedule, we have moved ahead to identify projects that we can advance if the funding is available. And I'm happy to turn over to Kevin Moss, our Senior Manager of Clean Transportation, to go through sort of where we are at. I've asked him to talk about not just the what of the investment, but also a little bit of the why. And as you may have seen in your agendas, we'll be splitting this section up into both a public and an executive part of this session so that we can discuss information that we obtained confidentially through an RFP that we've issued in this space. So at that point, I'll turn it over to Kevin, and Bert and I are here to back him up if you have questions about where we're at. Thanks.
Great, thanks, Sarah. Hi, everyone. So yeah, as Sarah indicated, wanted to provide a little bit of the, the what and why. So starting with the policy and market background that Brian already covered. A lot of the, motivation for our work on the electric school bus front comes from the goals that are contained in Public Act 2225. And so, as BG indicated, we have a pretty ambitious 2030 goal of getting zero emission school buses to all environmental justice school districts in the state, and then a statewide deployment goal by 2040. Based on the latest round of DMV data that is provided to DEEP every year, there's a little over 7,500 school buses that are currently registered in the state. And it's important to note that over 90% of those are operated by private school bus operators. That's a pretty unique model. Here in Connecticut, about 60% of school districts nationwide run their own transportation, but we have much more of a private operator model here. And so that comes with some kind of unique considerations on the investments front in terms of kind of timing, investments around contract time periods and things of that nature. But it also opens up some strategic opportunities in terms of doing larger investments through, one entity, and then, them using those dollars in the sites that are most ready to electrify. So we've been working really hard to build strong relationships with the operator community here in Connecticut. Moving on to the why, we feel really strongly that electric school buses are a mature technology in terms of, battery electric vehicles are a well-proven concept, but the ESV market is kind of at this interesting tipping point where financing can come in and really help drive scale. And I have a chart on the next slide that I'll speak to a little bit more. But aside from the market opportunity, we also just really see a carbon savings and public health opportunity as well. So transportation is by far Connecticut's largest kind of sector source of carbon emissions at approximately 40%. And then within that, the medium and heavy duty sector has a pretty outsized effect. So as you see here, it's only 6% of on-road vehicles are medium and heavy duty, but they account for a quarter of the overall carbon emissions in the transportation sector. So that's 10% overall in Connecticut, and then a pretty outsized proportion of our nitrous oxides emissions and also our particulate matter emissions. And I think one thing to keep in mind with sort of thinking about the public health benefits of vehicle electrification is that you get the direct benefit for the kids and the driver who are on the bus every day, but you're also helping drive community air quality benefits as well with where those buses are operating. These are used every day, and there's also kind of the relationship that the relative benefit of these investments tends to be higher in communities that are already overburdened with other forms of, air quality stressors, whether it be ground level ozone or particulate matter or other stressors. And unfortunately, here in Connecticut, we have pretty persistent air quality challenges. Just last year, actually, the American Lung Association graded 4 of Connecticut's 8 counties as getting an F for ground level ozone levels. And so we really see this as not only a carbon saving and market opportunity, but also an opportunity to drive public health benefits to kids across the state. BG, you can go to the next slide. So this here is just a kind of a data snapshot of where the electric school bus transition is nationwide. This is from our friends at the World Resources Institute. And so you can see that about 3% of nationwide school buses have been committed to be electrified. That generally means that there's been funding provided, usually in the form of a federal grant. But what I really wanted to show here is just the fact that there is the sort of hockey stick curve that we're seeing on the bottom left here. And like I mentioned, this is, this growth in commitment and adoption and deployment of electric school buses is really being driven by federal grants. And I think we see an opportunity to be an innovator on the financing side and to help drive further scale. And I think that, that approach, as we've talked about here, is even more important to consider given the potential lack of federal grant certainty in the months and years to come. Fortunately, I did hear about an hour ago that EPA Clean School Bus recipients are currently able to access and draw down their funds. So that's exciting. Next slide. Great. So then just in terms of a little bit more about the investment that we're evaluating today, as we talked about, we're hoping to use our NCIF resources to drive school bus deployment in the 2030 EJ communities, and hoping to do this in sort of a braided approach. So the Green Bank financing will be braided with both federal EPA awards and then also DEEP grant funds. DEEP was provided kind of alongside Public Act 2225 with some essentially matching grant funds that they can tap into. And so for this latest RFP round, that was about $6 million in total that they've been able to access. And then the total kind of sum of potential investment that we're looking at is just under $60 million for over 200 electric school buses. And so I'd say a further priority of this RFP is to make sure that all of these federal dollars do land in Connecticut and that they're not essentially a missed opportunity. So in terms of the RFP itself, it ran from early December through early January, had a really strong response. There was only one EPA awarded project that did not respond to the RFP. So 187 of the 202 buses were covered. Unsurprisingly, there was strong demand on the grant side. So $14 million was demanded of the $6 million that DEEP had available. And so there was a pretty, I'd say, targeted review process that we ran with DEEP to understand all of the kind of outstanding project costs that all of the respondents had, look at their federal tax credit opportunities, things of that nature, essentially trying to figure out how we can stretch those state grant dollars as far as possible. And then that eventually, enabled a more thorough financing conversation. And I think we're pretty excited about the mix that we've come up with. So next slide. And in terms of the Green Bank investment itself, in terms of what the financing can be used for, I'd like to say that it's a kind of a 3+1 model. So the 3 refers to the equipment itself. So our NCIF dollars can be used for the buses, the charging stations, and then any sort of infrastructure costs, either on the customer side of the meter or the utility side of the meter, that help support the overall electrification of the fleet. And then the 1 is just sort of our kind of creative financial capacity to offer as needed solutions. And I'd say that generally speaking, that tends to be bridge loans, mainly to enable cash coverage during the period before being reimbursed for an applicable federal tax credit. There's both a vehicle credit and a charging station credit that we've been evaluating as part of these awards. And so then in terms of next steps on the and what we hope to do with the investment, it's obviously to extend those NCIF resources to support the landing of these projects, in support of state policy. And as I mentioned, retaining all of those federally awarded dollars in Connecticut. And so we're currently in the process of confirming everyone's project-specific financing needs as they, have received their conditional award letters from DEEP. They're able to generate a more specific estimate of what they need on the financing side. And so in the coming weeks, we'll be jumping into the due diligence process and then developing and executing conditional term sheets. The reason the conditional is underlined is just to reference the fact that federal grant awards are, I'd say, on uncertain ground. And so the award and the use of the Green Bank financing will be dependent upon folks being able to use and access their EPA awards in tandem. And next slide. And then I also wanted to give just a little bit of a, overall sense of what we're, how we're hoping to help the state reach those 2030 goals that have been outlined. And so I'd say from an organizational standpoint, we're really looking to kind of create pathways that take either schools or their operators from technical assistance all the way through financial assistance, with that being both grants and financing. And so we're hoping to kind of create a recurring graded approach where schools and operators can, know that they can rely on the state of Connecticut to access funding. I think we see DEEP and DECD as the most logical potential partners to create those sort of recurring funding opportunities. I think us and DEEP have really enjoyed the collaboration that we had on this first RFP and think that the model works pretty well and are looking forward to doing it again. And so excited to explore what that could look like on a recurring basis. I believe Sarah and I have talked about this as well, but we were recently selected by PURA to lead a fleet advisory services program as part of the medium and heavy duty EV docket that's been going on for many years now. And so we'll be looking to launch our first cohort in the summer of 2025. And that service will essentially allow schools and operators to come up with electrification plans, figure out sort of what their best electrification scenario is based on their vehicle and driving logistics and grid upgrade needs and everything else. And so we'll be targeting that support to schools and operators in distressed municipalities and covering the cost of that service as well in the first two cohorts at least. And then on the utility side, actually just 2 weeks ago, Sarah and I testified in front of PURA about sort of the business case of different electric school bus rate structures that they're deliberating and how crucial it is to get proper rate structures identified for the way that school buses are charged, and then how either operators or schools pay for those costs. And so we think that's a really crucial piece of the puzzle, and that will hopefully also get landed in 2025. And then longer term, I think that we just want to support vehicle-grade charging innovations and also deepen our relationship with the EDCs so that we can drive smart grid planning and essentially anticipate any challenges that may prevent electrification due to grid constraints and serve targeted investments if needed. So we're essentially trying to create the ideal market and kind of policy environment so that current incumbent school bus operators are willing and able to electrify, or we can attract new businesses to the state so that they can leverage the conditions that we help create. And I think with that, we'll transition into executive session for a more targeted discussion of the proposals themselves.
Excellent. Thank you, Kevin. Thank you for that overview. Yeah, so Chair Reed, we want to have the team be able to go into details on the proposals that were submitted. So we wanted to request that we go into executive session for commercial information related matters. If I could request the senior staff, as well as Kevin Moss, Larry Campana, and Stephanie Cohane to join us in executive session, that would be great. So if we could motion to move into executive session, when that motion is made, I will put the camera on pause, the recording on pause, and we'll go into executive session. Then we will come out of executive session looking at resolution number 3.
Okay.
So
Oh, good. Do I hear a second? Do I hear a second?
I'll second Adrian speaking.
Thank you, Adrian. Okay, all in favor of going into executive session?
Aye.
Aye.
Opposed? Abstaining? All right, let's move into executive session.
All right, we are back.
Okay, and any more questions about Resolution 3, or are we ready to, do I hear a motion to approve Resolution 3?
I just had one comment, if I might, John Harity. It's just transportation is a big part of carbon output. And the biggest thing to tackle is medium and heavy vehicles. And so this is really significant because the buses, they're not cars, they're bigger. And as we begin to crack that whole question about how we do trucking and stuff, this is a really significant step. So it's terrific that we're doing this.
Okay. Did you want to move to approve Resolution 3
Yeah.
while you're at it? Do I hear a second?
Oh, come on now.
This is
Second.
Dominic. I'll second.
Thank you, Dominic. Okay, all in favor?
Aye.
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 Opposed? Abstaining? Okay. Thank you, everybody. And thank you again for allowing us to put this board meeting together. It was really, really important. I think our next board meeting is going to be Friday, March 21st from 9 to 11 a.m. And so we'll be able to, circle back and hear, what's been discovered and what's being proposed. So do I hear a motion to adjourn this board meeting?
So moved, Matt.
Thank you,
Second.
Matt. Thank you. Okay, all in favor?
Aye.
Aye.
Thanks, everyone.
Goodbye, everybody. Thank you so much.
All right.
Bye.
Bye-bye.
Bye-bye. Bye-bye.